All right, so big picture on Alphabet, aka Google. They're about to reach all-time highs. This is despite some bad press and presentations that Gemini had by way of Google. Um, and as you can see from the weekly chart, we're clearly in an uptrend. Although price did pull back quite a bit a couple of weeks ago. And if we scroll down to the daily chart, price came down, closed below the 200-day moving average in yellow. That was a false breakout to the downside. And why I say a false breakout, typically if you're below it, you're in a secular bear market. If you're above it, you're in a secular bull market. Even though price fell below it, the 200-day moving average is still pointing up, along with the 100-day in white, along with the 50-day moving average in red. So, however, they recently made some news last week. Jim Cramer said that Google is now relevant again. And that news actually came out by way of Apple when they discussed and announced that they may license Google's Gemini Chat GPT rival for use on the iPhones. Now, speaking of Apple, they're kind of behind too in use of AI. And so this partnership is a net benefit for both companies. So last Friday, investment banker Wedbush announced it's raising its price target on Alphabet stock to $175 a share from $160. The bank also said it's putting Alphabet stock on its best idea list of stocks most likely to reward investors over the next 12 months. Now, Alphabet has an unmatched breadth of data to develop and train AI models across text, images, and video, and a massive user base spanning Google Search, YouTube, Android, and other Google applications. And given these advantages going into the AI battle, Wedbush simply believes that investor worries about Google coming late to the game are overstated. So is Alphabet a good buy? Um, I would say no. At this point, it was a good buy when the stock did pull back, but prices are challenging all-time highs again. And one of two things can happen. The price can sell off once again. The safer bet is to wait for a breakout and a retest, but I'll show you what I mean in a minute. So Wedbush reminds investors that Alphabet continues to dominate in what has always been its core business, digital advertising. Statistica data confirm Alphabet's Google remains number one in the market with 25% share in the US and an even more dominant share of the mobile internet search activity that supports Google's ads market by 95%. Pretty crazy. But even if the AI bull argument falls apart, Apple still has a healthy core business to fall back on with dominant market share and a stock value at only 25 times earnings, 12% cheaper than the S&P 500 index. By the way, Alphabet stock looks like a buy, according to the author of this article. Now, this is what I was referring to. Google was a buy down at 132. As you can see, let's zoom out to the weekly chart first. Price did close above, or below rather, this major resistance support level and couldn't quite get to that other level, which would have been a huge buy opportunity. It stalled and paused out at the 200-day moving average at about $133. Now, Wedbush has a $170 target from 160, which is still below at current prices at 152. Let's scroll down to the daily chart, and this is what I was referring to. Price is going to move up. It's going to challenge this level again. Again, that's resistance. One of two things can happen. You get another sell-off, or the better setup is you close above, get a retest, and then you get the next impulse higher. So it depends on how you want to skin this cat. Typically, think of trading like a stream, a salmon swimming upstream. It's going against the current. Um, However, when the salmon lays their eggs and then go back out to sea, they're swimming with the current downstream, and so it's easier, right? Um, and so it's easier to not fight and go against the trend. You want to go with the trend. And as we saw from the monthly and the weekly chart, prices are making higher highs and higher lows. So the chart suggests wait for a breakout, retest, and the next leg higher. Thanks for watching. Subscribe. Please like the video.